The following is a presentation of TFNN. The Tiger Technician Hour with your host, Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians on this 14th day of August, mid-month. Can you believe it? Just real quickly, the E-mini right now is up 15 at 2840.50. You can see on the left here, Chapman Wave Automated resistance levels 2840 to 2842. Actually, in both cases, that's the 2-minute and the 5-minute. It looks to me, based on the patterns that we're looking at, that the Chapman Wave falling axis, what I put down here, right there, says a break above 2842 would probably go even higher, and then you'd probably get at least a leg D in the 5-minute chart. Key support is at 2834 to 2832 today. But once you break into the 2844s, it could be a pretty nice run to get back to the Dow 29. Help it get into the 29,320s, sorry, 25,320s. All right, back to our story here. And the story is that the Dow, let me go to the Dow, that's the XAL. We'll get to that in a moment. I didn't finish yesterday because we had a number of calls. So today I'm looking at this. See this arch formation? In the Chapman Wave methodology, let me go to my CD introducing the Chapman Wave methodology. There's a pattern called the arch formation. That'll be right here in chapter 13 out of 476 slides, 27 chapters. This is chapter 13, the arch formation of the inside wedge, right here. So what we look at is that there's a pattern that can take an equal number of bars to the upside as to the downside. Remember, I make a big deal about saying that a bear phase is where there's an acceleration down with successive bars that are really long candles to the downside. But when you're looking at the normality of the market, the exhaling and inhaling, the natural breathing of the market, most of the time you can have a plumb line in the middle of an up move that takes X number of bars, and coming down to key levels of support, you can just have the same number of bars. There's nothing. It's just in that bear phase that what is the expression? It's the elevator up and the trapdoor down. I don't know what the expression is, but it's something like that. The vortex or the black hole on the downside. But that only happens sometimes in the look at this candle here of the BBHs way back in 2004. This is the Biotech's, S&P Biotech's BBHs. Look at that acceleration down. But wait a minute, there was fantastic white bars on the upside. So the dark gray bars on the downside, that was the acceleration. And then it turns out to be an exact 90-degree angle from the plumb line at the top to the bottom. All right, I'm doing that for one reason only, to show you that the Dow in the daily has this very large arch formation. And so far, even though there was a gap down, a couple of ugly candles, all we've done is gone 1, 2, 3, 4, 5 bars down. And the 4 bars that scream from 25,120 in the Dow back in early August to the 7th of August, 25,692, we've taken 5 bars and we haven't even taken out the 25,120 level. I wonder what's going on with that thread. I was told today that a lot of people are suffering here in the Northeast from allergies. I don't usually have allergies. Maybe this is part of an allergy, but boy, it's tough. All right, so there's this Chapman Wave Roman candle right there. I'm not going to talk about it. Maybe we'll get to Technical Friday and I'll talk about it. Meantime, parameters to look at. Dow's up 111 at 25,298. I'm anticipating that the 25,153 low yesterday will be taken out soon. The 14-period moving average, the black line, has been tremendous resistance for 3 days now, and that comes in at 25,353. What is that? 200 points higher. And what we're looking at is the 9-period moving average is at 25,367. Those are the moving averages I would like to see tested in this bounce. And I had a Chapman Wave trend gauge flashing yesterday, which indicated that we should have a 9 to 11 point rally in the E-minis today. I think the pattern, so remember, I like to look at the tide. For me, the tide has turned to down. The reason why we are short, I think the tide, the Dow tide, the S&P, and the semiconductors, and the New York Stock Exchange, the tide has turned on the shorter term to down modes. Not quite yet in the Qs and the IWM might be re-triggering that today. We'll see by the end of the day going into tomorrow. So patterns to look at. A bounce, try to fill the gap. I don't know if we can get there. That would be the high of 25,401 made on the 10th. As it is, the 25,290s to 25,320s, maybe 25,360s, a lot of resistance points there. Okay, support, and if you look at my automated Dow chart of the 120-minute chart, and so the daily chart, 24,978 is key support. MACD is very weak, stochastic is very weak, on balance volumes trying to rally. If you look at the 120-minute chart with the technicals here, you'll see that this lowercase h that goes to a lowercase m. I should show it in my CD introducing the Chapman wave methodology. I don't know if I'll have time. Think of this arch going to a second arch that makes that lowercase h that makes another arch for a lowercase m. A lot of support levels, 25,238, the resistance and support levels. You can see the cluster here. So unless the Dow in the next 2 days actually takes out the low of 25,000, what am I looking at here? 25,153. We could chop around here just a little longer. All right, enough with that. S&P, let's just do these quickly so I can finish up before the break. SPX.X trading up 17. That's very good. 2839.63. It's trying to get above yesterday's high bar. It needs to get somewhere into that gap down. My thinking is that between 28.43 and 28.48, it's going to be a lot of resistance, and then we'll start coming down in an H pattern. MACD's negative, stochastic's negative. I suspect that the sell mode will increase the downside momentum, and that'll make the peak E in the weekly very significant if it occurs by Friday. Let's go to the QQQ, 123, QQQ, the NDX trading vehicle for the 100, NDX 100. Nice rally here up $1.13 to 180, 145. It needs to close underneath, underneath 179.75 to get a sell signal, not even a sell mode, but that'll be very close to starting a sell mode. Meantime, up at 182.63. Boy, if it gets there, that's really excellent action. I don't think it's going to be able to get that. IWM, let's go quickly. IWM, Russell 2000, nice bounce, trying to make that Chapman wave inside track repellent line right there at 168.72. Very strong resistance. We're at 168.24, but it's really, look at the weekly chart. It looks like the dollar was before the dollar broke out. This has just been trading in a sideways action. It hasn't broken down at all. So IWM, no signals yet. No sell signal yet. Let's go to gold, and gold is trying to bounce here. Gold is up 4 at 12.03. What a day yesterday. I didn't have a chance to talk about it. That smashed to the downside as the dollar, our dollar, should I say, is trading at 96.56. Another new recovery. I need to talk about this. Right at resistance. I'll be back. Basil Chapman, 107, up to the Dow. Be right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, we're back. So Ford is up 7 cents, but it's had a horrible chart. That peak D, remember the Chapman Wave peak D, the fourth highest peak? Oh man, how many of these? Look at this peak D twice. Look, the weekly chart makes a peak D in Ford on the 19th of January at 13.35, plummets down to about 10.20, rallies up to a peak D again at the 12, just over 12, like 12.20. No, I don't think it's even 12.20. It's 12.15. 12.15 highs back in June, and kaplop down to 9 from 12. That's 3. That's, oh man, that's a 25% decline. That is just not good. It's just not good news. And, you know, oh, that reminds me. Right here, I'm going to do this because I almost forgot. I can't tell you how many times I spent quite a lot of time on something that I wanted to discuss. And then through the excitement of the challenge of the hour, I just completely forget about it. Look, oh, that's not what I wanted to show you. This is what I wanted to show you right here. There it is. Hope that's such wrong. Did I just lose it? No way. Oh, there it is. Have I lost it? Oh, I wanted to talk about these charts here. No, I couldn't have lost it. It must be here somewhere. What's that say? Oh, there it is. Okay, here we go. Look, you see this? This is from the Boston Globe. Now, the Boston Globe financial sector, that section just has kind of Associated Press and kind of just business reports. Very often, very seldom do they have a real good analysis of things. They're pretty good in just disseminating news that they get. And there are a couple of writers there that I follow, and one of them I tend to disagree. I find she's become politically motivated. So her stories have a tremendous, you can actually feel the bias instead of being objective. She writes well. She thinks well, but her bias just upsets me. Anyway, but yeah, this one's quite good. And I follow this guy because he does commentary. Well, he makes commentary in some of the articles that he writes, and I often disagree with his commentary. But this is quite good. I thought, how can you tell there's a recession coming? This is a Boston Globe yesterday. By one metric, stock prices have reached the second highest level ever, behind the dot-com spike of 1999-2000 by Evan Horowitz. A Globe staff, August the 12th. And then right here it says, Here we go. So here it says, there are really two different kinds of indicators to watch when trying to suss out the odds of I like his writing. Suss out the odds of a coming recession. Evidence of worrisome economic trends, but also signs of excessive psychological optimism. So he says it's not hard to spot examples of both right now. Anyway, what he does is he shows you the consumer confidence chart and can peak just before the recession. And then he shows you, look, in July, they didn't give you the date for that. I'm sure that was 1987. This is the 87 crash. And then after that, consumer confidence obviously plummeted and it ran higher. So he shows you this chart and he shows you that the three recessions over the last, say, 30 years, the real big recessions, not the mini stuff. And then he shows you the big one in 2008 in terms of time. But what's really important is, look where we are. We aren't up here where we were back in 1997, and we certainly have a way to go, and we aren't even close to where we were in 2008, which was over there. So I'm looking at this and I'm saying, you know, consumer confidence can be very, for my measure, can be very disruptive in your thinking, because it gives you, it's almost like the advanced decline line. You know, everybody likes to look back and they say in 1929, the advanced decline line was declining since 1928. So exactly when were you supposed to go short? If you went short at the wrong time, you lost 25% of your money. You made it up, certainly if you were still able to be solvent and short at the top in September of 1929. But hey, it's getting the ictus, getting that turnaround, getting that moment where you're getting the correct signal that says, now you go short everything you can. So this is difficult. So that's one. Consumer confidence, I treat it as an indicator. I'm going to show you something else in a moment, but a little unreliable in terms of timing, not unreliable in terms of eventual outcome. Well, eventual outcome is, you know, we'll all be 6 feet under. That's a greater, you know, certainly a 100% reliability factor there. When yield curve goes negative, recessions follow. So here's the other one. Here again, look, the ictus, the bottom, comes in, and only later on, months later, do you get the actual recession. And you can't tell whether it's a deep recession or just a mini recession. My contention is the Great Recession of 2008. 1992, 1993, when those banks went insolvent, that was horrendous. That was really serious. It was equal to anything we've had. Okay, I just wanted to show you that I'm going to show subscribers tomorrow. I forgot to do it today. This is something we're going to be watching, and we're watching it closely. All right, we're out there. So, well-written article, Evan, and you didn't make any conclusions, but you gave things to watch. I like that. That was good. All right, so now we want to go back to our story, and our story says that gold has gone down very sharply. The weekly chart is recycled to a trough, a leg G/C to the downside. Weekly chart, the monthly chart, MACD is expanding, stochastic still very negative. I can only tell you that, same with silver, any rally would be considered a bounce as far as I'm concerned after this kind of beating. It's going to take some kind of massive news-related statement that's going to make the dollar trading right now at a new recovery high. Oh my, look at this. I think this must have been a mistake. Come on, anybody tell me, did the dollar really trade down to 95.16 this morning? 95.16 to 96.64. That probably is one of the biggest candles that I've ever seen in the dollar. I'm not sure. It looks like it, but I'm not sure it did it. But look at this dollar at the high right now of 96.64. I've said we remain long. And the reason why just a minute ago I said I want to talk about this green dashed line is because we're right there now. In fact, we've just gone above it. This green line in the daily chart, let me make it even. This is called the Chapman Wave Inside Track. It's part of the up channel. Look at this beautiful up channel from the base lows to the inside track. That's about a 3/16 of an inch. I love this 3/16 of an inch. We're talking mathematics, right? This is the inside track buy or a support area. And this is a Chapman Wave inside track repellent or sell zone. And if it closes above that, you remember we used to have, what's his name here? Fred used to call it the Cal zone. Yeah, this is the sell zone. 96.52, we have broken above it. We haven't closed above it, but this is really good action because the MACD is very strong and still expanding, giving it a lot of room on the upside. And the stochastics at 91%. Anything above 80% is good. Anything above 90% is really good. Anything above 95%, and we've seen a lot of charts over the last 3-4 months stick in that 95% area for quite a while. So this is a very big positive. I don't see how gold is going to manage to rally against that kind of strength. And look at the weekly chart. Look at that breakout in the neck formation in the Chapman wave, stalk leg, body, neck, something, and a huge leg in the above. Consistently off the chart. Wow. Man, I tell you, that is good. I'll be right back, guys.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, just for those of you who do work with the Chapman Wave methodology, if you're looking at the 2-minute E-mini, the S&P E-mini, you'll see that there was a peak E right there just before 11, and then it pulls back to about 11:20. It comes down to the 28.37s, and then it goes an inside peak A, peak B, peak C, and peak D, all underneath that peak E that was made at 28.41-ish, and now we're trading in leg E at 28.41.75, starting to build some upside momentum. Look, each one, you learn how to use the time sequences. So the 5-minute chart has also got that inside wave that's gone to a leg D. You would think that that would be a new C, but in fact it's an inside buy mode going to a D, and you haven't had a breakout yet. It's close in the 10-minute chart. Just thought I'd go through that. And while we're talking about Chapman wave, one of the dentists said that he doesn't have the slap down in the dollar, but in the very small time frames, but he does have it on the day. Yeah, I think this is an aberration. Let me do this. Control R. Sometimes that'll just eliminate it because it's being corrected. No, it hasn't. I don't believe it even went close to that. Couldn't have been. I didn't see anything like it. So very good action in the dollar. Looking at the EUR, USD, the euro-dollar currency pair. Ooh, not good at all. Not good at all. The third 1.13, the third 0.13 is better hold because this does not look good at all. USD JPY. Remember, I spoke about the divergence for the first time in ages, where the yen was actually pulling back instead of moving with the Dow. Now it's rallying together with the Dow, but wow, not a good chart formation, and it's trading at 111.09. That makes the 110.10 area really sacrosanct. A close under that would not be good, but a close above 111.70 would start to repair some of the damage. It'd be good for the weekly chart. Surely, yes. Okay, crude oil trading up earlier this morning quite sharply over 68. Now it's at 67.04, down 13 cents. Not a good looking chart. Peak E in the weekly chart, leg D. Remember, I spoke about this. I said, this is making me a little nervous when you've got a retracement that goes to a peak D in the monthly chart, not taking out a major resistance level, in this case, 81.99, the high in the continuous contract from whatever the high was in May of 2015, hasn't even come close. I'm watching this really, it's a detailed analysis because the weekly chart is suggesting the 200-period moving average of around about 66.70. That should be a magnet for the weekly chart, and so far we don't really know if it's going to be. That means the XLE is pulling back. It's up 9 cents, but it's been pulling back. Had a rally that failed yesterday and today. Holding okay, but not looking very in the monthly chart, but not looking good in the weekly or the daily charts. Better hold 74, otherwise it goes a lot lower. Let's go to the TLT, then we can do a whole bunch of questions that came in. TLT, a nice bounce, couple of last days, but if I see the TLT trading in the 121.50 to 122 area, I'm thinking market is starting to slide as equities, money comes out of equities. But so far, this is just trading in a range. As I said, that's the same thing about the TNX, the 10-year yield. Look, if I can get the right symbol, TNX.X. Here we go. There it is. Trading in the band. Look, in the band. It's made a peak E top with a down arrow in the daily chart. Yeah, I think that it's just trading in a range, and it's trading between the 30.50 area and the 27.70. It breaks either one of those ranges, and it can extend in that direction that it breaks. Still only a peak C in the monthly, watching it closely. Now, I want to do semiconductors. The semiconductors, we don't have a position right now. We're looking to get a position, probably a short position, but we don't have a position right now. It's kind of stuck. It's in a sell mode in the daily. Weekly chart is just in a trading band. It might chop in this band for a while, and look at that monthly with that oval pattern, like a Chapman wave, stalk leg body formation. So they had a question about advanced micro devices. Joyce says, Joyce, hi, please give me a projection of where this this will go. Bought at 12. Might buy more if you think it will go up more. So the monthly chart, let's start with that. 1, 2, 3, 4, 5 beautiful green candles so far, but the month is only halfway through. But today we made a new recovery high. That means that August has got a new high, and this is extending. I'm calling it leg F for now in the monthly chart. I don't have to make any big deal about it. It's at 73% in the stochastic. MACD is expanding. Could it become a brand new A? I have a feeling that when all this is done in 3 to 4 or 5 months' time, when we look back, we will find that advanced micro devices might have actually started a brand new breakout in the monthly chart because it's held the 14 to 13 area key support. But I'm only going to say that that's a possibility. The weekly chart has gone to a leg D in a straight up move It says at worst, the 1655 area, 14-period moving average, and the 17.59 area, the 9-period moving average, that's a big cushion, that area. MACD's very strong, stochastics at 87%. I would have preferred if it was a 92%. So this is good, not great. And the RSI is good, relative strength. It is good. It is good. Now, what's happening here? This is the same pattern. Keep an eye on this. You see this peak D and a leg E right now? Keep your eye on the left side chart. That's the daily. Look at this. You see that D going to an E? Look at this. You see this chart going from an E to an F. I'm calling it an F/B just for another day. I think it's an F. Now I'm going back to advanced micro devices. And as that was happening, you see the technicals were starting to fail. In this particular instance, the stochastic is good at 81%. The MACD is good, but they're not anywhere as strong as they were just a couple of bars ago. I'm watching this. So, Joyce, I'm going to say, first of all, bravo. That is fantastic. You have picked up advanced micro devices, AMD at 12. Is trading right now at 19.88, up 15 cents. I'm just going to say to you, there are two aspects that I would consider right now. One is the core position of 12. As I'm looking at it right now, I would have to give this almost time rather than price. I would say I'm going to give it until Friday or Monday of next week to say, man, if advanced micro devices doesn't take out that 1800, the exact round number low of the second, in the next, going into Monday, in other words, the next 4 or 5 trading days, that's really good action, especially if the market starts to turn down again. So I'm reluctant. You've done such a fabulous job here of getting in and holding it, having the patience, that I'm going to say to you, because of that, consider two things. One is that you've had a fantastic gain, a 7-point gain. You've had what, about a 63, 60, 57, yeah, about a 64%, I'm just doing it off the top of my head, gain. I would say to you, just in terms of money management, I would take something off right now at 1985, even if it goes higher. And I would like to take that off because I'd rather take it off now than give away 1.5 or 2 points with an 18 stop, when in fact, I'm not sure it's going to, at this point, move 2 points higher. So this is a win-win situation as far as I can see, because you can keep your core position and use just money management to say, hey, fantastic move, I'm taking something off right now, why not? And that's kind of the way I would look at it, and we'll deal with it again in 2 days' time. I'll be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So the IWM, I said, was going right towards that dashed resistance line. I just wanted to finish that. I had some really good questions. Judy, I'm going to try to find that world. I spent a little time last night, but I kept coming up with either they're incomplete, they weren't quite what I was looking for. I don't know which one to go to in TradeStation, which is the world index. I do have the Wilshire 5000, but that's, I think, all United States, every stock. I'm just not sure. So, and another question is the EM. Yeah, the EM should be bouncing today. It's bouncing. It's up 24 cents at 42.74. I do think that 71.64 is my target. A test, it's like a magnet. So whatever happens, you should keep coming back to the 41s. It's at 42.72 right now. In the EM, I don't think it's done with the consolidation. I think it's going to go on a little while longer. A question about TPR. Oh, that's the old. Oh, that's what Tapestry is. Is that right? TPR. Am I correct? How? Why do they change Tapestry Coach? Tapestry. What is Tapestry? Come on. It's trading up 6.48, up 13% at 53.94. This is the old Coach, not Voch, but Coach. Guess I didn't tell this is TFNN type spelling. Coach, there it is. It needs to go to, that takes me to the next thing that I wanted to spend time on. Thank goodness I remembered. In April, it hit 55.50. It's trading right now at 53.91. Looks like it's going to try to test that level. And now we can go to what I wanted to spend time on. I showed subscribers to my opening call this morning. I said RTH. The Market Vectors Retail ETF is very close. It was at an all-time high. It's in a leg G/B in the daily, leg D in the weekly, but broken decisively above that left side 103.87 high of February. We were 106.59, up 88 cents, and a leg E in the monthly chart. This is telling me that I just don't want to get overly bearish right now. I don't, until these retail, let me tell you. So the XRT, which is the S&P retail sector ETF, new leg E in the daily up at 51.64, up 93 cents, up $1.84%. Leg E in the monthly getting to that Chapman Wave inside track. Let me just draw it in for you here. Make that green, make this red. It's in the inside track repellent zone right there. Let's see how it handles it. This is usually a good indicator if it starts to fail, that this is going to be a very strong resistance area. Leg D in the monthly. So put that together with Amazon, which is my part of my cash index. That's the Cintas, Amazon, SPY. That's the S&P depository receipts. And cash. H, Home Depot. So here we are, nice reversal from the low today. It gapped a little bit up, then pulled back. Now it's back up again, up 22 at 1918 on Amazon. Had a round number yesterday high. Thank you to Jeff for telling me that, 1925.00. But what happened today? It had a round number low of 1900, and earlier it had a high of round number 1920. Oh, that's still the high, 1920. So 3 round numbers in 2 days. Says to me, start watching Amazon really closely. But you know what? No matter how I count it, I get this as a leg B. What if there's a peak B today because 1925 is not taken out? There's a pop tomorrow, just modestly high to about 1930, and then it pulls back. And then on Friday, we start to get leg D or very close to leg D by Friday or Monday. Then I'm saying, you know what? The following week, we've got to be careful because that's the week that Amazon could pull back. And I need Amazon. I need Cintas, CTAS. Look, at nice day today, up $1.88. I need it to be breaking down, not rallying to recovery highs and then all-time highs. So this is going to be something to watch. Says to me, the big move to the downside is yet to come. At this point, it's just sideways, choppy, choppy, choppy as we're rotating. We're still rotating. We don't have a unison sell-off. Look at Home Depot. Hey, I was at Home Depot the other day, a big item that I wanted. I waited, and then someone saw me, and they went off to lunch, and there was nobody that could help me. I had to wait an hour and a half. I'm saying, so is this the way to run an operation? And yet they're still the place to go to because they have such a variety of what you need. So I thought that was interesting. I would not short a stock because I had to wait for an hour for an attendant. But I would say, hey, this is something to watch for. Made an all-time high at 204.25 on the 24th of July. Home Depot is trading at 192.92 right now, minus 122. Earlier today, as I saw it pre-market, I saw it up 4. And it hit. It closed yesterday. Oh my! It closed yesterday. Round number low 194. It closes at 194.14. Today it goes to 195.98. Trading right now at 192.93, having hit 191.27. You remember, round number. If you get a round number high, a round number close. If you close above that, that's very positive. If you close below the round number low, it says, "Whoops! Be careful. You could be going even lower." I think that Home Depot is telling me, just you got to be careful here, that we're rotating through different sectors. And the XLB, this is the building material ETF, Select Material Spider Fund, that's a peak E in the monthly. Unlike the Dow, the MACD and Stochastic did decisively turn down. So this gets a down arrow for the past since January. And the arch formation in the weekly chart, look at arch formation here in the Chapman methodology. You go to arch, that is, where is that? That's arch, I think is chapter 13. There, chapter 13. So this is it. Looking at that arch, remember the arch formation? And you get your Chapman wave inside wedge targets line. So keep that in mind, because what we're looking at here, you've got an arch formation. You've just taken out this left side low in the XLB. This is a problem. If you look at the HGX index, trading right now at, where did I type that? Did I type it into the den now? HGX right now. Yeah, a nice rally today, 3.78 in the home builders. But look at that ugly candle from yesterday. There's that arch formation testing the left side low of 295.34. Yesterday we go to 295.12, 22 cents lower, closed above it. This is going to be very important. What happens in the building, in the housing sector over the coming week? I got a feeling that there could be a rally, but that rally is going to stall in the 302 to 304 area, and then it starts coming down again if there is a rally. Okay, that's that. Next question I had was, yeah, thank you, Sean, for that on the dollar. I think we're close to deciding that there wasn't a big gap down. It was just an aberrational tick. XLI, yep, let's go to the XLI. That is the industrial ETF. Trading made a peak E top in the daily. Way back, it made a peak G back in March, I think it was, in the 81 area. That was the weekly high. In January was the weekly high. Oh, that was January. Sorry. In 80.96. Yeah, this is struggling. This is struggling, and that is the industrials. And the weekly chart is not very pretty. So, yeah. What about Boeing? Boeing yesterday was down. Today it's probably up. Yep, up 83 cents. Boeing looks lousy. Yes, I know they have billions and billions of dollars in orders. Doesn't mean to say you can't have a decent rest after such a big move. All right, we've got one more back. Dow's up 109. S&P's up 17.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Don't forget, Steve comes up, Dave comes up, Tom comes up. We've got good programming here. Leg D in the natural gas continuous contract, but in the weekly chart, rectangle formation, just stuck in this range until it can crack 310. And this point is at 2.96. No, I'm going to say until it can crack. Yeah, 310, 3.04 was the last high. All right, so questions I got. I'm going to try to answer some of them real quickly. Yeah, so question about the volatility index. Look, the VIX index right now is down 1.33 at 13.45. It is still way above the 9 and the 14-period exponential moving average. I suspect that it's going to work its way. It went into the teens. Remember, I said in the teens, you get your triple-digit down. That's what you got yesterday, double-digit down in the S&P. But you've got to have bad news that constantly filters in. And I'm saying that if it's going to filter in, that's going to suggest that the VIX index trading now 13.46 will make a leg B at some point over 15. That some point could be within a couple of days. I think that the bad news just keep filtering in. But if there's a benign news-related sequence of 2 days, you can get rallies. The market needs, in this case, to have this overhang of bad news. If there's no bad news, it's like a relief rally. It just pops up, and that's kind of what we've got here. So just make that real clear, that if the VIX does start to go under 12 for any reason in the next 2-3 days, because the Dow is up another 150 points or more, S&P is up another 20, then I'm saying to you, hey, this is just sideways action. My thinking is that the tide has changed, and the tide has changed in most of the key indices, and that we're going to go to lower lows and lower highs for a while to come, and that's the scenario, and that will save you. If you are short, you should see your shorts get traction on each big pullback. That's kind of why I'm looking at it right now. We're going to add to the shorts on this rally if we get a chance, and we've still got our long position. We even added one long position yesterday, which is actually holding pretty nicely considering everything. We'll see. I'm trying to be bifurcated in a bifurcated market. I'll be back with Tom later on today. Stay tuned for Steve and Dave and Tom. I'll be back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.